What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for February 17th, 2023. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. And glorious market indeed it is. So again, the market is continuing to struggle. It can't break 4,200. Yes, it's actually been getting rejected roughly around the 4160. It's pretty hard ceiling, and then the 4200 is a very hard ceiling. But one thing to consider is going into this essentially earnings run that we have had up to this point. Things are starting to die down. There's not enough steam to continue up. And I think a lot of people are getting premature in a pivot. The market itself is getting premature in a pivot as things are really bad. And today we did have the PPI today, which came in very hot today. Now, again, you can look at it and interpret it essentially however you want. But ultimately, it came in at 0.7. Looking essentially, the consensus was 0.4. Previous was 0.2, so a negative 0.2. So again, definitely not a good sign. Something we've been talking about, even looking at the core this past week. Yes, it's come down 0.1 percent, but still, that is not enough of a drop. You have to realize on how many rate increases we've had, 75-point basis moves back to back to back, and it has barely dropped. We should see more of an impact, and the fact that it's getting sticky at 6.4 is a very bad thing. And with anticipation of China opening back up, with the influx there, and also understanding there's been train derailments, if you haven't heard on the news. So there's that black swan that is contaminating the air and the water. And so supply, again, you're going to have potentially another huge supply shock, and what could be a major issue and cause inflation to shoot back up. And if that is the case, it's something I've talked about. You will reset the clock on Fed raising rates, and we could potentially see a 50-point basis move, if not more, and continued rate increases for a longer extent than what is previously been advertised and what people have been buying into, and what this essential push has been. So this could lead to some major fear here, as it's people are predicting a 25-point basis move, and then you had Bullard come in later today and essentially say he is not a voting member. He was a voting member, but now no longer is a voting member. So being said, he said a 50-point basis move is not off the table. It's something he said about a week or two ago, last Monday, before Powell came on. Now this is an issue because people are expecting only 25. But again, the problem is that inflation is already sticky at 6.4. We would have thought we would come in at 5.5, but it's not the case. Food, energy, housing is going through the roof. It doesn't matter how many times you say it. It's a very bad issue, and the problem being is that you can continue to raise rates, but people will now not only battle inflation and it potentially starting to push back up, but now they got high rates, so they can't borrow money. Our system is a debt system, and so now that they can't borrow money, it's putting people in a very bad spot. And as the more rates are continuing to increase, puts more strain on businesses to lay off. And now businesses will continue to lay off, and then that is going to put more pressure on people to liquidate even more assets, create more debt for themselves, and also realize that because of the rate increases, that ultimately, if you have any credit card debt that is not fixed, or any debt that's not fixed, is essentially you're going to start getting charged more for being in that debt, and that debt that you carry over month to month. And so it's putting people, it's jeopardizing and putting people more at risk. Now, something we've talked about is people, a lot of people have taken HELOCs in home lines of equity after essentially borrowing against their home uh, to get themselves out of here. But the problem is that the burn rate is extremely is increasing, especially if inflation continues to go up. That burn rates can continue, and hopefully people don't lose their job on top of everything. But that is what the problem is that the Fed is essentially putting us into a recession. Is it by chance? Well, it all started with the printing of 40% of the money supply. Not only that, you have to put it under control. So you printed all this money because of the pandemic. Now you have to go siphon all that money back out of the system, and that's going to cause for a lot of pain in the market. Powell's been forewarning about this multiple times. The market. The sad thing is on the last monetary policy is he gave hope, and that's the last thing you want to do is give hope when there really shouldn't be hope right now, because it is very misleading. And he tried to kind of backpedal a little bit to try to say we're very data dependent, that I can't adjust, but the market wasn't going to hear that. The market was going to hear disinflation and start running. And so now the market can't break 4,200, and we sit and we wait for the next step. Now, Bullard, like I said, just came out and recording this. The market just closed, recording this just right now, and Bullard said 50-point basis move. Are we going to gap down because of that? Because of the PPI was so hot? It could be a strong possibility. It could be the thing that, well, the one thing that the tipping point that we're looking for us to break back down. The problem is we have, if you can see here, we have a lot of support. All these green and yellows in like violet color here is all support, which is now something we have to break. Again, it didn't take us very hard to break this. We got a hard rejection off and then buttered through it pretty easy. Now we have a potential catalyst that could start selling us off. We don't have a lot of news between now and the next monetary policy or the next core. Yes, we do have a lot of random data sets is what's kind of guiding the market right now. And again, you're portraying a very strong market that can take it, when in fact, I personally know a lot of people that are struggling right now. But you're having misleading data that's saying that no, it's fine, we can continue. Everything is fine and dandy. People have enough spending money. Their spending habits show that they're doing great. Is that the case? Are people just spending lots of money on their credit card? But we're finding out that a lot of those purchases on their credit card are just for basic living expenses. People only use credit cards for emergencies, right? That's what a lot of people grew up learning, and now they're heavily reliant on that to pay bills. And so, with that being said, we have to see how we open. We're going to have some digestion of what's going on with this. Again, moving forward, we're going to have some random data sets. Like I said, data is going to have a lot more weight until we get to the next core. It's going to be important. We're going to have a beige book and meeting notes, which are going to be some other things that we're going to be making moves off of. Aside from that, we are getting a normal down cycle. And we'll see what happens with this down cycle. Is this the thing to start the down cycle? Again, big earnings are pretty much done at this point. Where do we go from here? And that's the key. And the big thing here is I'm going to point out here, now that we're going to jump into some technicals here, the dollar. So let's look over the SPX real quick. Like I said, if we can break below, roughly we got to break below the 40.56. The problem being there is that we have, again, like I said, a lot of support around the 4K mark. We're going to have to probably, if we do gap down into that tomorrow is option expiration day as well. So that's what this red line here is for. If you see this red dotted line, that's options expiration. I don't know how much is coming off the books, but it is, it feeds into that as well. So you might get added sell pressure as people switch option contracts as well. So that being said, you might get some a really big push to the downside. But one thing I have noticed is since there's been a lot more put buying over the past year, whenever we have options expiration, we typically push up. Now, typically in a normal market setting, you would get selling off because people are essentially selling their calls, and now you're getting the reverse effect. So we have to see if that holds true tomorrow or not. But nonetheless, the 50-point basis move that is not priced in, we'll see if that changes overnight. If that's priced in, they start trying to price that in, the market's going to correct pretty heavy because people were not expecting that. People were expecting the market to turn. If you're pricing in a 50-point basis move, you're going to scare the market. So we have to, again, that's something that needs to be digested overnight and see how we take that. But so we're watching that. Again, the 4,200, if you're a bull, we need to break 4,200. In my opinion, this bear market is not over. You got a lot of levels you need to still break. 4,200 is one of them. 4,300 is the next one. You cannot break those. This bear market isn't turning. And not to even talk, we're not even talking about the sentiment of the market. The sentiment of the market is still extremely bad, and where we're sitting. And again, it's really bad that we have these false hopes and false expectations out there, and things are not great. They're absolutely horrible right now. So with that being said, SPX, we'll see what happens there. We have to see how we open up, but we definitely need to break below this 40.68. Again, could get a pretty big drop tomorrow if that's the case, or we hold and we try to pump back up to 4,200. We are playing this range. It's been a pretty sloppy range, but we're sitting between roughly that 40.50 and that 41.83 is kind of the top point there, but so we're sitting between this range. It's a big range, but the fact that the index is playing almost a 50 to 80 point range almost every day is something else because it's undecided. We need other news to really determine which direction. But like I said, we're getting into a natural decline cycle here coming up. So we'll see. Bitcoin. I got some wicks starting to push back down. Again, I had some positive news, I guess, from the SEC yesterday. That's why we started pushing. But the problem now being is that Binance has also come back into the picture. We need to be very mindful of this. There's been ties from Binance to Silvergate, and Silvergate is also under essentially is being watched by the SEC because they're essentially their involvement with FTX. And so if Binance, we've seen Binance do some weird things over the past couple of weeks. They've tried to say that they wouldn't support USDC anymore. So that being said, they wanted essentially U.S. Civilians to try to withdraw their money, almost is what they were asking. Now, what is the next step? Is that it comes out that they have closer ties with FTX. Again, they are one of the biggest crypto. They are the biggest crypto exchanges out there. If they fold, that's going to be a huge hit to crypto. It's not saying it's going to kill crypto completely, but it would almost put Coinbase on top, which is funny how that would work. So really watching that closely. I know there's been a lot of regulation about Coinbase and a lot of eyes on Coinbase and being the exchange to go to. So that is what is quite interesting. I want to see, again, this is all kind of just theory here and tinfoil hat, but there's a lot of strong indicators pointing that that's what's going to happen. I could see this thing folding down and then potentially just allow for someone else to get in at a very, very low price point, because if Binance does fold, we are going to come crushing down pretty hard. But nonetheless, we'll see. So keep Bitcoin very close watch. Dollars, something I was talking about. It's starting to break up. Now we've broken another level. We're back over 1.4. If this thing again pops over 1.5, the bulls are going to be in trouble. You want this thing to continue to sell, and the fact that it's not selling and it's coming back, something we've stated. It looked like it was going to break out. We'll see if this thing continues up. Again, if we come to 50-point basis move, you can guarantee this thing's going to pop back over 105 and start running. Inflation comes in waves. We have to keep that in mind. And I think we're getting ready to say a huge spike. Will it hit over 9.1? It's hard to say. There's a lot of things that are playing on right now that are feeding into potential supply issues, and that is what is going to cause inflation. And so we have to be very careful of that. And we are not in a good. We're already in a very weak state, and so yeah, we wait and we see. But it is definitely not looking good. And so another thing to also keep in mind here is that the PPI the next report could be altered, uh, just so everybody knows, because that's what we do. We alter reports when they don't fall in line with our thesis. So nonetheless, Tesla starting to get some heavy selling, hard rejection off the 200 here. Has got down to the 187. Again, I think this thing is going to potential tech. You got to watch Tesla and Nvidia. If this thing really starts imploding, tech is going to be the first thing to start selling off. And Tesla and Nvidia have been some of the biggest movers in tech. Watch for them to start taking a huge haircut over the tomorrow. If we gap down, you can guarantee tech is going to really take it again tomorrow. So tech will be the first to start selling off when it comes to inflation, and then like I said, we'll see what happens from that point. But and the rest of the market will follow. But we need banks to give for SPX and some of those others to really start falling as well. Apple, again, hard rejection here, roughly again, the 155. See if we can break the 148. Again, it's got a lot of support here, so it might be kind of choppy unless the thing gaps down below, which could be a strong possibility. Again, if we do 50-point basis move, this thing is gapping down. It's not guaranteed right now. It's just talk. So we don't know. We have to let the market digest that, but the PPI would suggest that a 50-point basis move could be starting to be calculated in, especially coming off that PPI. So we'll see what happens there. The Nvidia, again, this thing can really gap down pretty heavy. It's got some support here, roughly around the 208. You get the 200 moving average here. You might get a nice bounce off of here, but if it breaks the 200, you can pretty nice drop down to the 186. Again, huge parabolic move. Market's looking for 50%, so roughly around 187. Strong possibility if this thing wants to really start getting some gas. So one of the ones I do want to watch going into tomorrow. Moving forward, a couple of these other ones, I know Snow has had a huge rip. It's starting to sell off. Any of these big movers, Google try to push back up again. Hard rejection. This thing can see 86 again very easily. Shop, bad earnings, got absolutely wrecked and gapped down today. This thing can break below the 42 mark. This thing could potentially be seeing back down to 36. So Shop could be another one as well. BA looks like it's finally breaking down. Again, you want BA to hold the 204. If it can't hold the 204, again, it's in trouble. You got a lot of support here. Again, you haven't back tested any of these. This is what I'm talking about. When you're talking about parabolic moves, it's not back tested, so you don't know if the support's going to hold. This thing could straight butter all the support that's supposed to be support. We don't know, especially given the catalyst. Could start really seeing some heat there. JPM, again, rejection, cannot break 144. Bulls, you want this thing to break 144. Again, parabolic move. See half this move back down here, at least to the 125. Very strong possibility. Whatever's feeling the downside, again, that's going to really matter. Whatever's feeling the downside could cause us to start buttering these levels, especially because of these parabolic moves. That's what I was been concerned about this whole time. This thing just massively ripping up with no touchbacks and testing support. So again, same thing, Goldman Sachs, it's been playing range. BAC, same thing, playing range, just sitting there. So we'll see. Microsoft would be an interesting one too. Again, very parabolic move, especially with the AI stuff. You want this thing to hold. If this thing breaks below the 257 tomorrow, could get a pretty nice drop, potentially down here to the 243. Again, but whatever's feeling this thing, if the thing gaps big, that means the market didn't like what the PPI and what essentially Bowler said with a 50-point basis move. And we'll see if the markets try to price that in. If they do price that in, you're going to get a huge drop tomorrow and into Monday. So we shall see. And then we have to see how options expirations will play out. If it's going to play the reverse, because there's a lot more selling pressure. If we'll get a pop on selling pressure covering, could be a strong possibility. So we have to see how that does play out. But that's pretty much what I got. I don't want to beat this thing with a dead horse and make this video too long. Again, it is only Friday, but there's a lot of potential downfall tomorrow if the market wants to take it that direction. We'll see. So if you made it this far, go ahead and drop a comment what your thoughts, ideas, thesis is. And don't forget to drop a thumbs up. And until next time, I'll see you guys later.